Hello, welcome everyone. Been a couple days since we've updated a video, and one of the main reasons is we had our live mentoring here in our office in North Palm Beach and had a wonderful group of people. So you guys, thanks for being down here. What we were covering was the Algo optimizer, a couple really important changes and updates on this program, and I'd like to share with you a couple things that have populated in our trade signals. I think this is kind of be important for you guys to pay attention to this and see what the indicators are suggesting. First and foremost, what you see here in your screen is our live trading room. We call this the Algo room. Basically, this is based off signals and trades. We can take a look at this 15-minute chart in the ES first. What we're looking at is a couple things for you day traders you might find important. It generates signals under certain criteria, and it has a couple things like a trailing stop, profit potential, things of that nature. Here's a trade. Had a couple trades. That was yesterday. This was today. First trade got in on a breakout and lost money. Second trade got in, net gain. How do we know? Let's take a look at the performance. This is important. This is your trade graph for since May 1st. And what we like to do on any system is to go back and check out from the active month. So back in May, we were trading the front contract June, and we rolled over. Now we're in September. So this is the overall performance summary and the trades. So looking at periodic returns today, this is the weekly, this is the daily, and you can see we squeaked out. While yesterday was a better day, not all trades are winning days. This only trades, and I'm going to give you the setting here, from 8:50 in the morning to approximately 3:55 in the afternoon. Takes no trades in between or in the night session. So we're only asking this system to trade signals between about the open outcry session when everyone's in the live trading room. But this product, everyone that has the Algo version, we also have, as you can see on our live trading room, we have a couple things. The 5-minute ES model and the 15 model. We also have the spider up here. This is a 5-minute spider, not necessarily to generate signals for everybody, but to look at what the advanced decline is doing. The advancers, we finished today up 297 versus 196, so we had a positive breadth day in the S&Ps today. And that helps traders and should help traders to understand when you're trading the 5-minute model. I just want to give you a little look-see into this. So if you're trading in the 5-minute model, the advanced decline is going up, the volume is going up, and our volume indicator, this is a proprietary volume indicator, is going up, and you get a buy signal, and it'll show you exactly on your screen buy signal. So it shows you exactly the trades, when they happen, as they happen, and it shows the entry. What else does it show? It shows where the initial stop is and the intended profit target. So that way traders can say, hey, I'm watching this trade room, I'm looking at these live trades going off the board, and I can use my own information to corroborate whether I want to take that trade or not. So that's kind of the neat thing. Is it a reliable model? Well, let's take a look. Even on the 5-minute model, and look at your strategy performance. It has a little rough patch here, but again, when is that rough patch? Back in May. But overall, this trades, again, what's the settings? 8:50 in the morning, 3:30 in the afternoon, so we're not trading 24 hours, number one. And number two, the position size is 2 little contracts. Once again, performance graph, you can see 2 contracts in this time frame from February. This goes from February to July, so not bad indicator for as well as taking trades against this performance. We also, in our live trading room, I just want to go over, here's a 60-minute SPY. We have the VIX, both a 60-minute and a 120. We have crude oil, and this is pretty neat model as well. The crude oil, how we like to trade and share with people, and what we teach, by the way, is that when we have our volume indicator is pointing up, meaning we get a momentum reading of volume. Again, this is not a MACD or price. This is a volume indicator, friends. So when you get a buy signal, and in here it was kind of iffy because the volume's okay. What time is that? 9 in the morning. Yep, got clipped for a couple tick loss. But gets right back in the horse on a long, maxes out its profit potential, Key reversal, gets short and gets out, and again maxed out and does nothing for the rest of the day. The market didn't do anything. Yesterday, on the other hand, had kind of a lot better of a day and caught the trend. That's our 5-minute model. We also have the euro currency. Today, just to share with you, the euro currency didn't do anything. It took one trade today. It took a little nick of a loss. You know, would I judge this and say it's a great trade? It was driven by our Algo, our criteria. So we had a PPS buy, and when you look at where that market generated a buy, the volume trend was going up. So it was kind of going with the trend. But what did it do? It has a defined risk. It has a holding period. It got out. It never did anything. Tough day to trade the euro currency in this time period that we have, considering the fact the average, I guess you want to call it, range was about, what, 15 whole ticks? Tough day for euro currency. We have this model because we are looking for some volatility in the market to affect the dollar and, again, the euro currency relationship one day, not maybe today. But that's the models that we have up on our room that are generated off the Algo product. Now, let's look at I think I shared with you the 15-minute, but I wanted to go over this one more time because looking at the performance on this 15-minute, it's pretty decent. And I want to cover some of these settings because they're very important, again, according to my work. So look at this, guys, ladies and gentlemen. What we developed was a trading program, and this is the Algo 17. This is probably one of the most sophisticated programs that a retail trader can get their hands on without having a master's degree in programming. Let's double check what I'm referring to. Let's go to up here where you go to Format Strategies. This is version 1. We've changed this. We came out with a recent launch, and what does it do? Look at the difference here when we go to Format. And I want to scroll down, and it gives you the opportunity whether or not you want to trade my infamous high close doji. What we did is we have an independent risk reward wrapped around each individual signal. So if you're taking longs, they're a little bit different than taking shorts. Markets go up a little slower than markets go down, right? So instead of taking a generic risk reward ratio on all signals, this allows traders to optimize and find out what's the best risk reward on buys versus sells. Not just any buys, the proprietary PPS indicator, which is found not only on TradeStation, but also Thinkorswim. More importantly, it allows us to separate and analyze our longs versus shorts and the different types of longs and shorts we have. All right, so what's the story of the new change there? Well, it's pretty dramatic. It's a couple things that we added to this. You will see that on this chart, it has a big old pink line, and you probably say, well, what's that mean? And then it's got these little white lines. What's that mean? These are what we call last conditional change support targets, and these are the short-term last conditional change support targets. So when we get in a long position, the market trails your stop off of these last conditional change targets. And this is the what? The initial risk for the long. So this is actually today's trade analysis. And so let's take a look here. Go to Format Strategy. And here's the dynamic changes. We implemented different ways of trailing stop. A last conditional change, and what we added was a dynamic exit, which combines my last conditional change, which was written out of this book right here, with a variation of ATR. So it's a very sophisticated way of trailing a stop. Tighter than ATR, tighter than stars, and a lot of people are starting to learn that this is really an amazing tool. What's great about the Algo 17 product, you can find out by just optimizing which is better, last conditional change by themselves or the hybrid dynamic ATR LCC. And so that's what's really amazing about this. We also have what's called a compression exit by how many ATRs does the market expand, kind of like, like using an upper Bollinger Band for profit targets. So after a period of so many bars going up, if the market like gapped higher, for example, and you're in a position trade, if it's like an expanded of a 2 or in this case 3 ATRs, it would automatically get you out, so you don't have to worry about it. So there's various ways of protecting your trade, from profits to scaling your stops. That's what this shares. It's not over optimizing. It just allows you to take the trade and have the system optimized that you can find out what the best performance method is. Next, what did we share with you just a minute ago with the high close doji? Well, we have its individual high close doji, individual risk reward ratio, but here's what's really cool. We have this momentum. Now, what is a high close doji? Well, if you know my work, it's pretty much after the market has a downtrend, market needs to close greater than the doji bar. And if that's the case, what if the market's in an uptrend and then there's a doji? Well, an uptrend is not a downtrend. So we defined by looking at a momentum of the high close doji, the bar in this case needs to be so many bars back in length. And this is something we give in great detail in our education of how to make a more qualified trade. Now, here's another interesting component. By the way, if you're a TradeStation user or any type of trader, here's what's really amazing about this. We also said, hey, by the way, PPS, we have a risk reward ratio. Where did we come up with 2.2? We optimized it. We go, let's start at maybe 1 and let's go up to possibly a 5-point risk reward ratio, and let's go with an incremental jump of 0.25. We hit OK, and we can optimize that out. Now, what else is neat about this program is simply this. What if we take a buy signal and we filter it out? Don't take a PPS unless it breaks out above a moving average. Okay, that's nice. That's a good idea. What moving average? A 5 period? A 10 period? 20 period? I don't know. The best signal? Let's let the computer let us know. In this case, there's another component. Do we want a moving average based on, and here's the killer. Do we take the moving average based on a close moving average, a high moving average, or a low moving average? A moving average of the lows, a moving average of the highs, or the moving average of the close? So if you think about it, if you take a line and draw a resistance against the highs, and you take a line and you take a support against the lows, you're getting what's called a channel moving average, MAs of highs, MAs of lows. What happens if the market, and then you got maybe the moving average of the close would be probably in the middle, right? And so it would almost appear like a Bollinger Band. But if you get a buy signal that's greater than the moving average of highs, well, that's kind of interesting because that proves it's a bona fide breakout above resistance. Maybe not one high of a bar, maybe not 2, 3, 4, whatever your optimization is. In this case, it's like, hey, this has a pretty good realization of a moving average, all right? And it's a 3-period moving average of the high that works best for 5 minutes. That's what this optimization found out for us. Not every market's the same, not all time frames are the same, but that's what we've created here with this program called the Person's Algo 17. This is version 2. Why 17.2? Because this is the 17th release, and this is now the second version of that. So it's actually probably the 20th release of this amazing product. And this is where we can get an insanely defined amount of research and find out the structure and also filtering out whether we have buys or sells. And that's what we have in our live trading community. The other week, we also introduced, by the way, this other little tool, which is expressly amazing. Now, I haven't unleashed this on the world yet in far as our trading room, but this is the SPXL. So you day traders, step aside for a second. Let's talk for stock traders that are looking at programs. This uses that program, but it also does something very unique. It mirrors, or it looks at multiple time frames, and this is SPXL daily, and it's when the daily is in a buy and the next higher time frame, which was weekly in a buy, the chart turns blue. When it's in doubt, it turns white. When both are in sync, they turn red, and it helps define a downtrend. When we're starting to get a breakout again and we're starting to see the market go up, here's the Algo optimizer on top of that indicator, the TSI. So when you take a look at this, you go, wow, this thing's actually doing a pretty decent job of defining this amazing market dynamic trend situation, right? So we have specific tools, not information overload, but specific tools that give us information we need as traders. One, is the short term in sync with the trend of the higher time frame? And number two, look at this chart and you'd go, what are those other lines, person? Well, here's what's interesting. This green line, that's the last conditional change, the LCC, my famous LCC indicator, which again, written 15 years ago. That's on a weekly basis. What are these pink or fuchsia colors? Those are the LCC of the daily. So when the daily is greater than the weekly, it helps us to define, is the market in a strong trend? And that's very positive. So if I get a buy signal and it's above the last conditional change, I can now make a more structural or better defined strategy. And number two, I can say that looks like a very healthy buy signal. And so I can see it visually, I can code it, and we can put it out there. And that's what we've come out with the market. All right, so now let's move forward and give a couple indications of what sectors are changing and whether or not this market looks like possibly, is this got more legs to go, or are we near the end of the run? Quite frankly, we're getting closer to, in my humble opinion, to the end of the run finally on this breakout move. I think we've got maybe another 0.5 to 1% to the upside left in the spiders before we see maybe a little pullback in the market. Why do I say that? Well, first and foremost, let's take a gander at our radar screen. And what I see, number one, is that today, looking at the way the market trended against the S&Ps, the first thing you want to note is that we are going to have finally a potential key reversal in TLT. Now, our advisory service, the weekly newsletter, we're already in a August 131, 128 vertical bear put spread. So that's doing okay. What's interesting, though, is that we now have, and we've been talking about this, and I pointed it out, this is a specialized volume tool. It's a proprietary volume tool only available on TradeStation program. This is on balance volume. This is worth its weight in gold because more times than not, on balance volume gives you a false sense of volume reading. This volume tool is the momentum of volume. And so you'll see that the market made a secondary higher high in price with a bearish or negative divergence in volume. So we've been actually looking at this, and you'll notice there's an awful lot of dojis up there over the last 6 weeks. Half of them have been built with dojis. Finally, right now, we may get Friday, which is tomorrow, guys. If we close below this little line in the sand, we are right now warning that we're not only going to generate a weekly sell signal for the first time in a long time, but we're going to have a weekly sell signal with a low close doji under a condition of volume, negative volume divergence. That, my friends, would probably project a move. My guess is, using pivot analysis, somewhere around the 126 level over the next few weeks. So I just want everyone to be aware of that. Why does that give me a signal that the overall market might go down? Well, a lot of interest rate sensitive stocks, utilities, and a lot of defensive stuff, staples that have gone up, REITs, for example, that may weigh in on the overall index market. We're not seeing a lot of money going into other sectors such as energy, XLE. Let's take a look. It's going up, but it's going up grudgingly. Let's take a look at XOP, the oil and gas sector. It's just been completely abandoned. Today, President listen to me. President Trump signed an executive order, healthcare. Look at Labu, the leveraged ETF on biotech. Didn't go anywhere. IBB, I'm sharing with you weekly charts. It's actually not conforming to an upside move. My volume indicator is not showing strong participation. It's actually showing negative performance, meaning people may be more willing to sell. So we've got, let's see, lastly, KRE, regional banks. A doji last week, possibly we've got all about till tomorrow to see if we can get any major follow through. Banks aren't moving. Energy's not moving. Healthcare, XLV. Healthcare is stalling. I don't like that. So we need those sectors to go up if regional banks and interest rate sensitive sectors go down. So it could cause us to see a short-term pause in this advance of the rally. That's what I'm looking at. Now, lastly, let's take a look at the advanced decline. Today, we had a major divergence between large cap and small cap, meaning blue chip stocks, and the Russell. The Russell, we had a potential really neat thing where the volume would have made a little bit of a breakout, but it's failed. The advanced decline has failed. We have volume divergence. If we close less than this red line in the sand, that's a negative, and it may help drag down the rest of the market. And what is the rest of the market? What do I mean by that? I mean the S&Ps. So number one, we may have one more couple days, maybe one more pop to the upside. We did not have follow through in the breadth of the market. The volume, as we are breaking out with new highs in price, volume is not associated with that rally, helping to support the higher price or sustainability. So we have a little divergence in volume analysis. So that is something that's also a red flag. A little bit of red flag. And for those that may have already been short and been selling this all the way up, maybe a little premature, I would suspect that as we get into the July option expiration, that's probably the last stop for people that may have rolled out of June's positions and into July. And another last little tidbit, friends, is that seasonally speaking, after about the 12th trading day of the month, generally we see a little pullback in the market. So I'm thinking be careful up in here. Remember, bonds going down could be good long term for the market, but near term, I think it's bad. Why would it be good long term? It means that people are coming out of the bonds, great rotation out of fixed income, might find its way back into the stock market, maybe. Right now, it's going to add possibly some pressure on those interest rate sensitive stocks that have been holding the market up. I hope you enjoyed the analysis here and at least give you an insight of what we're doing around here at Person's Planet. And if you are interested in trading the markets, or more importantly, if you really want to know more about the Algo 17, if you're a serious trader, contact us here at info@personsplanet.com and learn more about it. You can also visit the website. You'll find out a lot more information to help give you a trader's edge. And it's just an amazing dynamic product. So anyway, thank you for listening, and to everyone out there, if you like the video, give a thumbs up. If you don't like it, don't watch it again, number one. Number two, if you don't like it, tell me why you don't like it. That way I can make sure that you have better insights. That's the real nature of this. Showing people, is the work that we've put out, is the work we've published that's been working for me for nearly 38 years still valid in this market? And can it work to translate to helping you make money in the market? That's what it's all about. Thanks again, everybody. Take care.